Masters themed. So with me always is my co-host, Joey.
Tiger Woods. Oh.
Tiger Woods, or Joey Gumatauta. Notice how he is wearing red and myself wearing green. Green jacket has not been claimed this weekend, but hopefully soon. Anyway, with this week's episode, we're going to dive into all things macro in a format that is 9 holes long. And so with that, I'll share my screen. So if you can see, obviously. So the format of this is going to be 9 holes. We're going to tee off on each hole, give a 30-second overview of the topic. Each hole, by the way, is a macroeconomic topic. Keep in mind, Joey has not seen a lot of the hypotheticals that we're going to do. The second one is the navigating the course. I'm going to throw out some pretty outrageous hypothetical situations, Joey and my way, and how would we go about navigating. And then obviously putting, everyone hates it, but it's necessary and it's the highest impact for the lowest amount of effort. And so with that, it's the impact on the broader economy. And so as we tee off, all these are named after the holes at the Masters, mind you. As we tee off on number 1, tee olive, we're going to dive right into our favorite topic, inflation. And so with that, Joey, I mean, do you want to tee us off? Would you like to give the 30-second overview?
Let's do it. Happy Friday, by the way, everyone. Glad to have you all back, per usual. Let's just dive right in. Yeah. So number 1, tea olive, inflation. So let's just dive into it. Talk about of it obviously on the show, but mainly, it's essentially and it's usually caused by growth being experienced by the economy, whether it's employment driven, consumer demand driven, expansionary monetary policies, supply chain considerations. But a great example is us coming out of the pandemic, right? A lot of the growth that we were seeing in the employment sector, post initial adjustment, obviously, and real estate as well, led to eventually economic expansion, which then increased inflation, and then the Fed obviously increased interest rates to directly battle that inflation. So, little background there.
Yeah, I mean, for the overview, by the way, we're talking about what inflation is, by the way.
I thought I'd give everyone just a history lesson and maybe dive into the theory of it.
It's just all about why your dollar isn't what it was back then.
Yeah.
And why, if it's sitting in just a non-interest-bearing savings account, it's not accumulating anything and it's losing value, why you should invest in real estate. But that's a plug. So the hypothetical, if you're just joining us, by the way, we're talking about teeing off is the overview, and then the navigating the course with a hypothetical. So imagine Jerome Powell wakes up to find that all prices have doubled overnight due to a glitch in central bank system. How would he address this sudden hyperinflation, Joey?
Wow, that's a big one. So prices have doubled. Okay, thinking about supply demand curve. No, I'm kidding. Just thinking about it more, I guess, conceptually. Immediately, right? Like there's levers that can be pulled in terms of monetary policy, interest rate, increases to directly battle that. I would think if there's a glitch, there would probably have to be quite an immediate, increase in the overnight rate, increase in. I don't. Would you think that they would increase like Fed rates immediately? I don't think so. I think they would probably try to get to, first of all, fixing the the central bank system. But I would think that the hyperinflation caused by that would be a lot more near-term driven and would then naturally adjust, thinking about an efficient market, right? Back to kind of where it was pre-system fault. But what are your thoughts on that?
Yeah, I mean, I think one, it's a massive technical issue if it increases overnight, but a lot of these countries out there are dealing with this hyperinflation. I mean, Argentina being one of them.
Yep.
How do you combat it outside of just transitioning over to a new form of currency in Bitcoin, for instance? I know some countries are actually just doing that to combat inflation. It's using the monetary levers in place. And just as you had said, I completely agree with that. And then if we were looking into it from the highest impact, how is this going to impact home prices? How is inflation going to impact home prices?
Yeah, I think inflation is directly synonymous with increases or adjustments in interest rates, which obviously on our previous shows and going forward is going to be a massive indicator on purchasing power, ability to have accretive returns from leverage due to higher cost of capital. So, I would think it has a very, very high impact.
Just direct impact.
Yeah, very high
Something
direct
that we
impact.
are monitoring quite closely here.
Yeah.
So teeing off in the second hole, just moving right along with it, pink dogwood at the Masters at Augusta. We're introducing it with supply chain disruptions. You heard about it over the course of the pandemic. You heard about what happened, how no one could get anything. Pelotons were backed up for days, all of that. So if we're going to give a 30-second overview, I can jump into this one.
Hit it.
So 30-second overview, supply chain, obviously it impacts every factor of life. If you think about the products you bought on Amazon this morning, all the way to the coffee that you're drinking like any day of the week from Starbucks, this is directly impacting it. And the main disruptions that have been happening recently are the Houthi rebels, the Evergrande tanker that stalled out. I mean, if you think about all just the natural occurring things that have happened over the course of the last few years, it caused all of these massive shipping containers that are coming from imported from other countries to the US to stall out. And so when that happens, everything gets upended. And so supply chain, even though we don't ever think about it as being an issue, disruptions can cause a nightmare in your morning routine, your daily routine.
Absolutely. Not only intercontinental and intercountry, but also intra. Do you remember, obviously, like the railroad strikes, like how that was affecting things, both from a commuter perspective, but also supply chain? Wild stuff.
Oh yeah.
Wild
I mean,
stuff.
the fact, yeah, and not to mention the writer strike.
Yes.
I mean, if we talk about supply chain, just new material, like
True.
that's gone.
Yeah.
Yeah.
It
And
doesn't have to be goods. It could be services as well. Yeah,
yeah.
absolutely.
So going into the fairway of it, navigating the course. Keep in mind, Joey has not seen any of these. Imagine a scenario where all shipping containers mysteriously shrink to half their size. How would businesses adapt to this sudden change in logistics?
Am I supposed to hit this?
I don't know.
All right, let me just think about that for a second. A scenario where all shipping containers mysteriously shrink to half their size. All right, well, obviously that's hilarious, but let's talk about it, I guess, from an analysis standpoint. So, I mean, you would assume that trade would probably decrease by at least half, right? If we're talking about
I'm saying the shipping containers.
the containers, so the amount
containers
that can
themselves.
actually be shipped.
Yeah, I'm saying the metal that forms those shipping containers. I am going long.
Okay.
Heavy on those companies.
Well, that's hilarious. Yeah, obviously there's a lot of considerations around material and how that would be affected. But yeah, I mean, quantity of goods would also decrease, right, in terms of the actual amount that could be traded and consumed. So, just thinking about that, how that would affect, pricing, right? Obviously, if quantity goes down, pricing would go up. How would that affect inflation, for example, from our first hole? In that scenario, right, prices would go up double. And so I guess, thinking about how that would affect inflation, that would also be a significant overnight, if not very near term effect in inflation, and hence interest rates would adjust accordingly. But this would be a massive change to logistics, no question, obviously.
Yeah. And so with that, everyone would have to adapt. The thing is, like, when things get shrunken down or things get like less efficient, a lot of times other parts of the economy make up for that lack of efficiency.
True.
Like, if you think about that whole thing that we were talking about, I think it was last week when we were talking about the fact that, like, the ATM, it made things more efficient, but technically speaking, you need to slow down the efficiency in order, but it broadened banks' footprints throughout. And so with this, even though it would seem less efficient, some sort of efficiency would come along in the tech that would lead to it being more efficient in the long run.
True. Like the Google question with the blender, if you were shrunk down to the size of so there was a question, right, that everyone jokes about where at Google, where it's like, if you get shrunk down to the size of like a pea and you were dropped in a blender, what would you do to get out of it? And the efficiency in your legs, because of your size to strength ratio, would be so much better that you could just jump up out of the blender. So direct correlation.
Well, like if you're shrunk down, your muscles are shrunk too. This isn't an ant scenario.
That's the thing. It's the strength to size ratio that actually gets benefited from that. So to your point, right, the efficiencies in other part of the economy would
No,
actually
but
help.
this is a hypothetical God scenario in which no, I don't accept that at all. If you're an ant, you can lift 3 times your body weight, but at the same time, if I'm shrunk down, I can't jump a foot out of
It
a
is.
blender.
Oh no, that's an
First,
actual physics like
oh,
phenomenon.
oh, fuck.
That
No, don't draw on fit. I didn't major in, I was a marketing. I was too busy jocking
To be
about.
fair, I stole that. I did not come up with that. I've heard that scenario many times from my software developer friends, but I thought it was hilarious.
Oh, and then putting for impact, how is this going to impact society? I mean, we kind of touched on it. We kind of touched on how supply chain disrupts every factor of life, and it'll impact trade, it'll impact inner country. The fact that we're going to get pissed off at someone because they're not shipping their goods over here, but they're going to get pissed off at us for getting pissed off at them, and it'll impact. I mean, supply chain's a big fucking deal, and
Absolutely.
it's only when it's in peril that you actually notice it. So that was number 2. The third hole, the flowering peach. Hello,
These
friends.
are the actual names?
These are the actual names. I'm not even joking. Yeah, this. I pulled this out of the fucking master's handbook.
That's hilarious.
Yeah, if you're just joining, by the way, obviously we're wearing our green jackets in symbolism, and then also that's not red, but and wearing maroon in order because Tiger wears red on
for
Sunday.
Crimson. Okay.
Oh, and so obviously flowering peach, number 3, the format digital transformation. What this means in terms of an overview, if we were to just tee off real quick, give a quick 30-second overview on digital transformation. I can take this unless you want to.
Hit it.
So obviously everything that we're doing is transitioning online, whether it be your social networks that are transitioning online, your Internet of Things is transitioning online, that book that you bought, the fact that you're going to a bookstore, looking up on Amazon, can I get it cheaper, then going on Amazon and buying it. There's a reason that a lot of things are shifting to the online presence. It's more efficient. It's less costly to the end user, but it's funny because with inflation, the prices are still rising. That's what we had discussed earlier. So that's kind of the overview about digital transformation, just the idea that our entire lives are becoming online, especially with real estate too. I mean, we're bringing 100%. Real estate online. It's the last mover in a lot of regards, but buying into real estate, et cetera, is kind of the exact goal there. But navigating the course. So this is a hypothetical. Joey has not seen this. I will reiterate. Imagine a world where everyone communicates solely through emojis and virtual reality. How would business?
Is that already where we're at? Is that where we exist?
I don't do emojis. I can't fucking deal with emojis.
You're a walking emoji.
No, that's wrong. But like, I get sent an emoji and I dislike it. Oh, did I tell you about this? When I was texting with friends back in the day and I didn't have upgraded to the new iOS, I noticed that everyone was like saying like, Joey likes this message, right?
Oh yeah.
And so I thought that people were actually typing out Joey Gumatauta like this message and then would copy and paste the message. So in group chats, I used to take a message and go, Alex Blackwood has emphasized this message.
I've actually done that to mess with people, but the fact that you actually were doing that, thinking that was the case.
But then it immediately got hit with, Sam has disliked this message. Like, just ridiculous stuff.
You are a dad living in a young body.
How would businesses adapt to this radical shift in communication? I mean, if you want to talk about that, you're probably the more attuned to the both of us in terms of emoji communication.
I would definitely agree with that, but I'm objectively not that adept. But how would businesses adapt to this radical shift in communication? Yeah, I think already this ties relatively directly into the fact that a lot of technological advancement, in my opinion, today is centered around convenience, right? Making our quality of living better without significantly increasing our cost of living, right? So most of the things that we do today, and obviously, caveat this with specifically talking about this life that we're living now, I think a lot of what businesses would want to focus on when pertaining to consumers, and then also, whether it's B2B or just in any way increasing their technological advancement. I think one of the things is focusing on mainly a virtual world, right? I mean, like one of the biggest trends coming out of the COVID pandemic, whether you disagree with it or not, is work from home practices, right? Not having to pay for physical office spaces, driving growth in commerce through digital interaction. I think putting in the comedic twist of specifically emojis and virtual reality would be hilarious, right? Because that's literally in terms of instead of short speak and kind of abbreviated, note taking, all the stuff that we do today to essentially make it so our communication efforts are as easy and convenient as possible. Doing it solely through emojis would be hilarious, right? It's basically just emotion only, and like you can the interpretation that comes around only a little digital picture or
It's like a dude like smiling,
Yeah.
winky face.
Yeah.
Like, what the hell did that mean?
It's like things already get lost in translation so much today. Like, how would that affect the fact that like you're trying to communicate something very important to me, and all you can send me is like emoji?
Yeah,
Like that's a whole different thing. But
I mean, there's some like the fact that back in the day we used to argue about like what did that text mean? It's like
yes,
like
yeah.
and the parents are the worst about it. They text like
Oh, yeah.
okay, period, and you're like, are you how upset with me are you? And then they call you and
Yeah.
they're like, oh hey baby, like,
Yeah.
how you doing? Like all that stuff. But anyway, and also virtual reality, we saw it with Meta. No one's
Yeah.
transitioning to virtual reality.
Yeah, and
now. So that doesn't even matter.
Yeah.
Putting for impact. How is this going to impact service providers on the go forward? Just like the digital transformation as a whole. I mean, we're going to see just broad distribution networks. If you look at it from just the warehouse perspective, industrial has blown up over the last little bit. And
Yeah.
the reason being because they're spread out. Warehouses need to be able to store these goods that people are buying.
Yeah.
And as a result of that, you're literally just trying to get as close to a city as possible.
Yeah, last mile distribution centers.
Exactly.
Logistics, yeah.
And so getting as close as possible is a pretty key thing there. And so all of a sudden, the path of growth is being actually distributed by these warehouses and
Absolutely.
the need for jobs around there. And so people are trying to move closer to that. And so as a result of that, it's kind of like weaving along. Like, I mean, the Inland Empire is a massive
Yeah.
observation of that in California. If you look and just from San Francisco down, it's like the further you get from the city, yes, less costly on the warehouse, but I guarantee you it's going to be a wave and it's going to continue down
Yes.
into the near future. So what we look for, obviously, is that passive growth in real estate. And while it's not directly attributed to digital transformation, it's got a little bit to do with it. Work from home has been driven massive.
100%. Like my 2 cents too would be a lot of the residential fundamental analysis that we would do and continue to do in places like, Georgia, kind of in and around the Atlanta MSA, Tennessee and around the Nashville MSA. A lot of the logistics and last mile distribution warehouse fundamentals were also directly tied to the in-migration of people into those cities, right? Because like you were saying, as those cities continue to grow, as population increases, employment opportunities increase, so will the distribution of goods, services, anything, infrastructure into those cities, right? And a lot of that is directly tied to fundamentals around, warehouse, like you were saying.
So that's hole number 3. We knocked it out of the park. I think we got a birdie on that one.
Yeah.
The flowering crabapple. I swear to God,
Who came up with
I'm
these?
not making up these things. This is at the master's course. Number 4 is the flowering crabapple. I might have not read the right article, but this is it. So introducing the topic, it's climate change and sustainability. I mean, teeing off, do you want to walk through? I mean, you're the one with the Tesla of the both of us. So
Yeah, no, I think, without diving into any opinions or maybe like too many statistics, obviously climate change refers to relatively long but also short-term shifts in weather patterns, temperatures, um, all primarily driven by human activity really these days, right? Greenhouse gas emissions, carbon footprints. So, there are a lot of sustainability initiatives today that are aimed at mitigating that carbon footprint and, buying towards a more sustainable future. Governments, businesses, consumers, there's a lot of incentives in place to reduce that carbon footprint, and people are increasingly, prioritizing sustainability. Right? You hear about ESG every day. Some incredible initiatives out there. I have a lot of great friends working in this space. So yeah, just a little bit of background.
and with that, I mean the bees at Goldman, right? Every office
Yeah.
building had a bee. So
that's actually true.
keep in mind, Joey has not seen this. Imagine a scenario, navigating the course is a hypothetical situation. Imagine a scenario where carbon emissions are visible as colorful clouds, making pollution instantly recognizable. How would this visual impact or this visual impact environmental awareness and policy action. I mean,
That's actually a really cool one. I like this, by the way. The other ones have been very comedic. This is thoughtful. I think it would be immediately apparent, right? I think one of the issues today is that it's such a like, I hate to say it, it's not front of mind. Like, when you're thinking about every
well, it's
action that
not
you do.
tangible.
Right, it's not tangible. Like, a lot of the things that you're doing during your day are producing waste just by living as a human, right? And I think having a literal, like, visible cloud as to like what pollution you're putting out into the environment. And that's everything, right? That's not even just emission. That could also be like light pollution. That could be like the amount of waste that you generate via the products that you're buying, right? It would manifest in many different ways. And the fact that you could directly see a tangible outcome from it, it's like the slow change of, you know, climate, I guess, impacts that you see from everyday activity, maybe not as slow as it was in the past, are just not forthright. They're not front of mind, but like being able to see it directly, I think there would be a massive shift in just general awareness at the individual level, more haste in terms of the change that we need to make right now as a broader population. I mean, what are your thoughts?
Taylor Swift Eras Tour would not happen. That's my 2 cents. It's the fact that I mean, if you saw the jet emissions that she had, she was
Yeah.
flying back and forth like overnight from Japan all the way to the Super Bowl and back, and I mean, it would not have happened, and it's just a pretty interesting hypothetical. But how does this impacting shifting consumer preferences? I mean, if you look at it, Type A buildings have blown up, or Class A buildings have blown up
Yeah.
because of these ESG initiatives. And ESG initiatives, the main factor when a lot of people were talking about these in investment committees was it's going to command a premium
Yeah.
because people are going to be willing to pay more for environmentally sustainable initiatives within the building, whether it be the light fixtures, whether it be the shielding off of the windows and the draft there. It's all about energy efficiency. And so with that, a lot of people were saying it'll command a premium. But now in a world where offices are kind of going by the wayside and residential is the one area in which I do see it happening, but it's not that much of an increase. What would you think there?
In terms of the
Premium,
preferences.
yeah, premium on rent.
Oh, premiums on rent. Yeah, I mean, if anything, ideally, ESG initiatives create efficiencies, right? Like that's the idea. Most of the time, unfortunately, in the short term, they just won't. But
Yeah,
you know, whether you're installing solar panels, you know, whether you are going out of your way to make bee farms on the top of residential buildings, which is actually a really big thing. You know, justifying those upfront costs will definitely result in a premium. That's just the name of the game. You know, you'll have to keep up with your total cost basis. Total cost basis will take it into account those capital projects. But in the long term, the efficiencies that it create will hopefully also decrease those subsequent increases in the future on your rent. So that's just my 2 cents.
fair. All right. Number 5, Magnolia. This is a little bit better of a name of all. Introducing labor market dynamics. And so, obviously, what we're doing here, teeing off 30-second overview on labor market dynamics. I can touch on this a little bit.
Yeah.
It's everything. I mean, where you work, you spend 90% of your day or 90% of your time, most of the time in work, around work, whatever it might be. And so, with that, it's all about the one, how that's going to impact the broader economy, and it's going to lead to weird consumer shifts in state of mind in terms of where they want to live, how they want to live, how mobile they're going to be, when they're going to start working. I mean, I saw a study today that it's like most companies are offering 4-day work weeks already post pandemic because people already just take off Fridays. And so with that, this labor market dynamics in also with the fact that it's a tight labor market to date is a pretty interesting scenario because the power is on the employee almost now. It's shifted in a sense. And you saw it during the pandemic. It's like as soon as people got burned out, they realized, all right, if I just log off or quiet quit, then technically speaking, I can maintain my job and continue on into the future. So it's this labor market dynamic. It probably won't go away, but it's a pretty interesting. Do you have anything to add on that?
Yeah, no, I mean, I definitely agree with your points, and great background. I would say that definitely also just caveat that applies to more high skill, you know, professions. You know, I will say a lot of tying back to kind of the last episode, a lot of the changes that are happening right now, especially with digital transformation, great way to tie it into that as well. There's going to be shifts in needs, right, and demand for certain forms of labor, right? Whether it is, like we were talking about before, shifting from maybe, like a factory line kind of scenario to more automated systems where instead of directly servicing a factory line or contributing, you will be actually working with the equipment and the opportunities that that creates to technologically advance those, quality control, innovation, best practices. So I think a lot of the demand around what types of labor needed will definitely continue to shift. And I think one of the things that we're seeing today, like you were saying in this title labor market, there is a lot of choice, right? People are inundated with the opportunity to kind of go out, set their own future. It's not as much up to big corporations as to the kind of all be all end all terms that they want to set and people have to generally accept. I think there's definitely a lot of freedom, but with that, the bar for high skilled labor is also much higher, right? In terms of like what you need to be able to bring to the table to achieve. So
With that, a hypothetical. Imagine a futuristic world where robots handle all menial tasks, leaving humans free to pursue creative endeavors. How would society adapt to this radical shift in employment dynamics?
Wow, that's kind of exactly what I was just talking about.
I mean, I think right off the bat, if you were to look at it from what's happening now with ChatGPT and AI,
Yeah.
I mean, Alexis Ohanian tweeted out the other day that one of his analysts, he applauded and nearly cried because the analyst said, listen, 90% of my job I've actually shifted over to ChatGPT, and he did this entire sorting of investment memos through ChatGPT, saving him and the team days
Yep.
of hours. And so if you were to look at it from that, I mean, we're kind of entering that realm where people are shifting over their menial tasks into these AI, generative AI, or just AI solutions in order to be saving hours and incremental time. And so that'll open up efficiencies. What that will do is probably going to create more inefficiencies that will lead to more efficiencies. And it's that kind of ATM thing that we had mentioned earlier. It's like that AI might free up a few hours. Now you have a few more hours to do different types of work. And so as a result of that, you're going to go into that a little bit more, and then that'll become more efficient over time. So it's going to be kind of a self-fulfilling prophecy with AI kind of saving time. I mean, Superhuman saves you hours, if not days, of time on your email. ChatGPT saves you on your theses at school. I don't know if you have anything that you want to add.
Yeah, I completely agree. I think a lot of the advancement is more so a tool for increasing productivity and growth rather than replacing it. So at the end of the day, all of it is contributing towards us being able to advance technologically as society, us being able to increase output, while hopefully also increasing sustainability in the process. And I think I completely agree with your analysis that it's more of an enhancer rather than a replacer.
How does this impact housing?
Yeah, in many ways. I mean, you want to start, or you want me to just hop right in?
Hop in.
I think one of the biggest things that comes along with a shift, well, maybe just thinking about some of the technological advances that are happening today, right? You have modular housing, right? You have a lot of essentially the ability. This kind of ties into the ruralization topic that we were talking about before. You have opportunities to expand infrastructure, whether it is housing or services tied to it, to lots of parts of the country outside of just kind of your core cities, right? So like you don't have to rely on the New Yorks, the San Franciscos, the LAs to find modern living without sacrificing a significant cost of living, or sorry, without going so far as to pay a significantly higher cost of living. You can achieve those in kind of cities that before were never really seen as primary cities, right? A lot of the things that have to do with that are opportunities like advancements in multifamily development. There's incredible advancements today in the way that we construct our buildings, whether it is safety, costs, quality control, replicability, and then also when it comes to providing housing itself, right? Like modular housing, providing opportunities for those that want to remain more mobile and don't necessarily want to be tied down to only renting multifamily units. You can now go out and purchase things like modular homes and homes on wheels that are relatively lower cost bases, but also give you the optionality to maintain kind of a freer lifestyle.
And I would say with that kind of multifamily development that you had mentioned earlier, it's also making sure that you're not too optimistic about this entire shift around. I mean, if you saw what happened with Austin, it's crazy.
Yeah.
People thought there'd be unlimited demand in the Austin area, and so multifamily developers came in, built up a ton,
Yep.
overwhelmed, flushed the city with supply, and as a result of that, a lot of people, I mean, house prices came down, rents came down a little bit. I mean, it's kind of ridiculous how optimistic people get when it's a bull cycle, and so making sure that you're cautiously optimistic about an area, diving into the actual numbers, diving into the supply that's coming online in much the same way that we do with our building or our properties when we look out. I mean, and that's a natural segue. So this is the turn. So next,
Well, what's happening?
the turn is the midway point. So obviously, most people at the turn would get a hot dog and rest and relax. Maybe a Gatorade. But with us, we're taking this time to really hype up what is going on here. And so, if you want to give an update on just what is absolutely incredible here with the Roman.
Happy to. So we did have our first stabilized month of operations, starting off the year strong for the Roman. You might have seen, if you already invested, obviously your first payout this month. That was only the first part of it. There's actually a second payout coming as well. That first payout did achieve a almost 1% cash on cash yield. Now, what does that mean for you? That means if you annualize that, right, and continue to kind of baseline trend going forward for the next 11 months, you would have achieved almost 11%, a 10.8% annualized yield just on the income generated by the property. So that doesn't even include your appreciation. I mean, that is absolutely stellar when we're talking about your cash on cash return. That's literally the return on your actual equity dollars invested with that levered kind of enhancement that we always talk about on top of that. So that's, post debt service, paying off your cost of your capital that we took out, obviously as a mortgage, as a service to you as the investors. That 10.8 is your clean income return, and that's not even including the potential tax benefits that'll be distributed at the end of the year.
And the appreciation.
Exactly, like I touched on. So that's an incredible start. I will say there will be a second payout coming, and don't want to divulge too much, but I will just say that that's going to be, for the month, all in all, trending towards about a 2.7% cash on cash return in 1 month. In 1 month on income alone, like you said, not including the appreciation.
Jesus
let that sink in.
That's usually north of 24.
It is.
That's north of 24%.
So, I mean, if you include the 0.9, that's almost 2.7 for the month. That's almost almost 34 for the year. Like, that's
on just the yield.
Just the yield, mind you. So, obviously there's a lot of year left. We are getting into the summer months, which will be incredible for operations. We are outpacing underwriting on this property right now. And then you will have seen in the updates that came that the Logan and the Kendall are obviously also in full stabilized operation. So super excited about that. The Bowser just had its release up at a mark-to-market rate. Things are going really, really well. You'll see more properties being released on the platform soon, but that's our midway plug. Things are going incredibly well. Like I said, we're outpacing underwriting on this one from a revenue perspective. The Roman will continue to perform, and excited to kind of release the next payout in the coming weeks.
I mean, this outpaced obviously underwriting on the yield.
Yeah.
The Roman is outpacing the underwriting on the appreciation, or the Kendall is just destroying that. The Logan is destroying it. Bowser is crushing it. I mean,
that one is unfair.
It's kind of ridiculous that this is just the return for the yield. I mean, not to mention the tax benefits, which you touched on earlier, is kind of absurd. With real estate, obviously, you get these passive tax benefits where it's a depreciation tax shield, which is not a cash expense. It's a on paper expense. And so that 10.8% APY, and keep in mind it's up, obviously, as we just mentioned, that's non-taxable,
right?
Which is absolutely absurd.
Right.
So that's the midway point. Go to www.mogul.club to check out more properties. Invest today before they sold out, because they're selling out pretty quick. So with that, number 6, Juniper. Monetary policy shifts. This one's especially for you. I mean, an econ guy through and through. Do you want to give us, teeing off, what is that 30-second overview?
Yeah, absolutely. So just released a blog on it if you want a little bit of a deeper dive kind of on what's happening right now with monetary policy and interest rate shifts. But essentially, this generally refers to a central bank, controlling the money supply and interest rates usually as a response to shifts in inflation, economic growth, economic expansion. So check out the blog. It's actually very informative on kind of how that directly ties into real estate as well, but don't want to take up too much time diving into the background of it.
So with that, the hypothetical, keep in mind, I completely forget what this hypothetical is, so I have no idea what's coming out.
Hey, I don't even know what to expect this one.
Imagine a scenario where central banks implement negative interest rates, meaning borrowers are paid to take out loans. How would this unconventional policy impact consumer behavior and economic activity? I mean, it happened.
I mean, yeah, that's the thing is it actually has, but it's just funny to think about.
So this ChatGPT throwing this one out there,
Oh, is
by
that
the way,
right?
yeah.
Okay.
And so just the clearly it's not attuned to what just happened, but obviously, do you want to take? I can rip into a little bit,
Yeah,
and then
I wanna hear your thoughts on this one, yeah.
so I mean, obviously, in this past little bit, interest rates climbed so low that, or dropped so low that in Europe, in Japan, they were actually paying out interest to the borrower. The bank was, and so
On
what does that
variable
mean?
rates.
What?
On variable
Yeah,
rates
yes.
and new issued fixed rates, is that what you're do they do that? Like, genuine question, would they have
They would
issued they
not
would
have
not
issued a
issue
fixed.
go
No, no,
forward
no, no,
fixed
no. That
rate
was a
on it. That's
variable.
only
That
on a
was like a
variable. Yeah,
variable.
important
And so
distinction.
with that, they would pay out. And so what does that mean? The economy just gets flush with dollars because all of a sudden, not only are people taking out debt at record paces because they are getting paid to take out the debt, they're stimulating the economy in ways that we had never seen, leading to those supply chain disruptions that we had said earlier because demand far outpaced the supply that would come on board. And so, with a lot of these interest rates that were being paid out to the end borrower, I mean, it creates this effect you saw with the stimulus checks that happened over the pandemic. It's even with a little bit of money influx into the economy by one or two users here and there, it was absolutely ridiculous.
Yeah.
The idea that they get paid for taking. I mean, that's imagine being like going to a store and getting like a piece of candy and then being like, "Here's your dollars." Like for that's kind of ridiculous. But I don't know if you had anything else you wanted to add to this hypothetical.
Yeah, no, I mean, I would say that typically, unless there's something that I'm not akin to, that would only happen in a state of significant deflation.
In a pandemic.
Yeah, yeah. Significant deflation. Yeah, that's a light way of putting it. Exactly. Like a pandemic, essentially an unnatural event that would lead to
A black
actually,
swan event.
yeah, yeah,
Yeah.
a black swan event that would lead to a shrinking in growth, and if anything, a shrinking in the economy. So, uh, yeah, I'll just caveat that with this. Something probably is going very wrong if this happens, but that would be quite a phenomenon to experience that today, and again, go out like you were saying with the opportunity to make money on quite literally purchasing and consuming. It's pretty wild.
Just living your life. I mean, with Mogul, you could throw it in a savings bearing account and get that 10.8 that we had said, or the 30%.
On income alone.
So how does this impact consumers? I mean, we kind of touched on it a little bit. Yeah. So that's how it does. I like this. This was we're all AI today. This is
These are all AI generated.
well. So the hypothetical was ChatGPT.
Okay.
I mean, if it's good enough for South Park, it's good enough for us. And so this is also oh god, Midjourney.
Oh, okay. Oh, the pictures.
Yeah. So did I misspell this? Is this the real? No, this is definitely the real whole name.
Campus.
Yeah, Pampas.
Pampas.
So introducing the next topic is global trade and protectionism, which is just a fancy way of saying that we interact with other countries. As a result of that, there is a deep network in place of tariffs, of import-export, just import-export dynamics that we're not even privy to on the macro scale. And so if you think about what is happening with that supply chain disruption that we had said earlier, it's about basically, and this ties into the protectionism aspect of it. It's the idea that we should not be as reliant as the imports and kind of create a stricter policy around that. And so with a lot of what we're doing around the Semiconductor Chip Act, if you pull that into it, it's the idea that I think it's like 50 billion they're going to put into all these different chip facilities within the U.S. to expand our semiconductor development throughout the U.S. But then we found out that we don't know how to make semiconductors, and so as a result of that, it was kind of crazy what's happening now, where you have to bring in a lot of these experts from outside the U.S. to be able to teach us, to be able to then learn and grow from that. So with that, if we were to dive into the hypothetical situation for this, imagine a scenario where countries engage in a trade war using giant slingshots to launch goods across borders instead of traditional shipping methods. How would this unconventional approach impact global trade dynamics? You have not seen these.
These, I didn't realize there could be so much sarcasm and comedy in the voice of these AI machines. This is
Chat GPT.
yeah, like, it
Yeah.
almost feels like they're messing with us.
Yeah, this is. I don't even know how we go about answering that. Like, one person would blame the other person that we shifted over to this method of trade, and then two, we'd immediately, whoever like found out a way to make it more efficient would claim it as their own, and then we would get into arguments even more. And so I don't even know if we want to bother answering this. I just don't even know how you'd go about.
That's absurd. That's just pure entertainment.
I don't even. What does this mean for him? I don't fucking know. On to number
It
8.
would literally just be launched.
Yeah.
No real exchange rates, no nominal exchange rates, just pure launching goods all across.
Just ship it, get it out. Number 8, yellow jasmine, income inequality. Obviously, tough topic to touch on. Do you want to tee off this one?
Yeah, sure. I mean, it's obviously something that directly impacts everyone, no matter where you sit in your income bracket, and kind of even no matter what country you're in, regardless of the economic policies. I mean, barring some forms of communism, et cetera. But regardless, it is income inequality refers to the unequal distributions across a general population. Yeah, I mean, I don't want to give too much opinion on it. That's the objective background.
Yeah, and I mean the objective background, if you're looking at the data, it's like less than 1% of the people control, what is it, like 60 or 70%, some egregious number of the wealth throughout the U.S. And it's this wealth gap that occurred. A lot of people are saying that with that, the pandemic actually increased that wealth gap over time. And so it's about being able to bring a new level of financial literacy and a new also wave of jobs into lower income communities. And so a lot of these communities are some are seeing an influx of newer higher paying jobs, but a lot of them aren't. And so we won't dive too deep into that, but
yeah, the one thing I would add there is I think a lot of people focus generally on like what is an immediate remediation that can happen, like what's the band-aid you can put on it. To your point, it's never really a band-aid. I would definitely argue it's more so root solutions, education, increasing opportunity across the board. So completely agree with that.
So with that, imagine a scenario where everyone's income is determined by a spin the wheel game show. How would this random distribution of income impact societal dynamics and economic? To be honest with you, I think this is I think we would go back to acting the exact same.
Yeah.
if we're looking at this scenario, if someone people that I don't even know how you'd go about saying this, but at the same time, it's people would go about acting in this kind of hierarchical manner, regardless of what happens. Right. And so society breaks down when it comes down to this. And so I don't even know if we want to.
Yeah.
Maybe we skirt clear this one. Chat GPT. All right, let's. All right, number 9.
They're trying to stir up controversy. They're trying at this point.
This one's a little bit more fun. So obviously, with this one, we're talking about technological innovation. And so platforms like ourselves. Keep in mind, we're only doing 9 holes this, so this is the last one. Okay. And so with that teeing off 30-second overview, I mean, it's pretty self-explanatory. I don't know how you would go about doing that, but it's just using tech to make all of our lives better and more efficient, and sometimes for the worse, but at the same time, the goal is for the better.
Definitely.
And so with that, navigating the course, imagine a scenario where humans can instantly download skills and knowledge directly into their brains. How would this technological breakthrough revolutionize education, employment, and society as a whole?
It's actually a pretty thoughtful one.
That's a good one.
Yeah, definitely. I think it would be, if that really were the case and there were no weird negative side effects, I think that would be incredibly beneficial. I mean, one of the major things, and this kind of is an overarching theme that I think is becoming very apparent, is general acts of a giant population of society as a whole will always kind of outweigh and overpower the kind of individual actions of for example, you and me, right? Everyone has different needs when it comes to how they digest information. For example, you're a very visual person, right? I can conceptualize things, via numbers and writing relatively well. And I think everyone has different needs, and one of the hardest things is solving for that, right? In terms of what can we do to increase the opportunity across the board, right? Make it a little bit more fair for everyone every day. So I actually think that this would be pretty interesting and pretty cool.
I mean, we effectively have it with ChatGPT because in a snap
That's
of a
true.
finger, you can know everything.
That's true.
Granted, these skills, that's where it gets. I would immediately start learning how to play guitar. Like I don't, I think, yeah, it's a great thoughtful question. Good job, ChatGPT.
Yeah, that one was a little less backhanded.
I mean, this is, I think that's kind of it. So with that, I think that's a wrap.
Awesome. This was a fun one.
So thank you all for joining. Obviously, you're tuning into the Masters. If you have time, check out the website, www.mogul.club. That's a 30% yield on the most recent property on an annualized basis. Pretty outstanding there. So obviously, a lot of properties selling out quick. So head over to there. Invest takes 20 seconds, and you'll be saving a lot of headache in the future when you're kicking yourself. But treat it as an interest-bearing savings account, and reach out to us with any questions or anything that we can help out with, what you want to see next time, all that, and hit subscribe.
100%. And tune in same time every week, Fridays, 1 p.m. ET. So we'll look forward to seeing you guys next week.